Friends, this is a pleasure to talk to you again. As you know, we ran this series on the ESG topic. The last one we did talk about, all three of us actually, Nachiketa, Pratik, and myself, we talked about the ESG principles, the core, and several other, aspects of that. Today, we are here to talk with you the BRSR reporting in India and the related assurance that companies would be seeking because that needs to be presented in your annual report. And there are recent rules and developments around that. As we all know, I think SEBI has mandated BRSR reporting, and there is a recent updates about how you need to do assurance around that, and there and really the objective of it is again to build the momentum around ESG and the BRSR because while companies present this information out in the public, how that information becomes more credible and more validated and brings more confidence, by the both investors and various stakeholders into the data that is shared. And I'm sure this is a process of evolution, but this is extremely important step in that direction. So we have, our colleagues Nachiketa and Pratik who are going to talk about this. So I would like to hand over first to Nachiketa to talk about, the developments around BRSR and the assurance, which is expected around that. And then, after that, we will have some question and answer, and then, I'll be happy to take any questions from the audience as well, right? So, Nachiketa, I want to hand over to you.
Thank you. Thank you, Madhu. Let me just start sharing my screen. So do let me know once my screen is visible. Can everyone see my screen?
Yes, please.
Okay, great. Fantastic. So Madhu, thank you for, briefly recapping, what we had covered last time. In fact, I also wanted to just do a quick recap of what we had covered in session one, just for the benefit of some of our, audience members who will be joining for the first time. So very quickly in the previous session, as Madhu mentioned, we, did a deep dive into the BRSR report itself. What is the BRSR? What are the different types of the BRSR, whether it is a comprehensive and whether it is a core BRSR? We looked at what are the KPIs that comprise of the BRSR core. We also looked at the structure of the BRSR report. And post that, we also sort of did a little dive into the recent press release by SEBI, in which the regulator has, come up with the requirement for companies to do a reasonable assurance on their BRSR core, as well as, some additional requirements with respect to, value chain disclosures on BRSR core and the subsequent assurance of those as well. And we also discussed the sort of glide path that SEBI has put in place to, make sure that companies transition into this BRSR core disclosure as well as assurance. So this is a very brief overview of everything that was captured in the previous session. In today's session, I would really like to focus more on the assurance part of things, given that, assurance has really come to the forefront and SEBI is, now requiring companies to start looking at the BRSR code and get it assured, and that too in a reasonable respect. So it is going to be critical for companies to understand how they need to prepare for assurance, what exactly sort of, constitutes of an assurance. And to do that, I would like to sort of just, at a very high level, go through just a couple of KPIs. I know there are many KPIs, more than 100 KPIs, and obviously we can't go through each of those. So I've just picked up two KPIs that I would like to talk through the audience just to give them an example of how the BRSR requires companies to disclose that information and how an assurance provider would, basically look at the information while assuring that particular KPI. So just to kick off with, when it comes to the prerequisites for assurance, I mean, what are the four key things that, assurance providers focus on? First and foremost is a proper overview of the business process and the internal controls. It is very important for assurance providers to have a good understanding of the business process itself, how the company is conducting its business, its industry. And the reason why this is required is it allows us to have a very good idea with respect to identifying the relevant data sources and then identifying the necessary controls that are required from a reporting and monitoring perspective. Also, we do have to look into the perspective of, whether management is reviewing these controls through internal audits, because at the end of the day, companies do have multiple different systems, some manual, some automated, some AI driven, but how controls are established in order to mitigate risk is one of the most critical aspects of assurance. The second part looks into the methods and calculations, and this is coming to the KPIs itself. So verification in the accuracy of the formulas and calculations, is the company actually calculating the numbers in the right manner based upon the, either the provided guidance or the best practices. Also assessing, if there are alternative methods which are, equally effective if chosen, and addressing any updates in methodology, because as we know, with respect to several of the KPIs, particularly the environmental KPIs, the methodologies themselves are evolving as we speak. So it is important to remain updated in that respect. The third aspect is that of assumptions. Understanding and defining the key assumptions about the ESG data that a company has prepared, understanding the appropriateness and the significance of all of these applied assumptions, and also being able to, apply a retrospective analysis to some previous years' information. And the reason I say previous year's information is, the BRSR requires companies to publish 2 years worth of information side by side. So you always have to prepare your current year disclosure. And alongside that, you also have to give your previous year disclosure. And as we discussed last time, the reason this has been made so is because the regulators want to see how companies are improving over time. But that also means that, we do need to apply some degree of, caution in looking at the previous year's numbers as well, just to ensure consistency between the 2 years. Lastly, it's about the data itself, ensuring that, the data used while preparing these ESG disclosures are appropriate and of the necessary quality. Looking at, any possible bias that may have seeped in, looking at the, relevance and the reliability of this data. And also, in some cases, considering contradictory evidence if any such is observed. But these are some of the, I would say, prerequisites from an assurance perspective. To quickly go on to the examples that I mentioned, let's take the example of Principle 3, right? Principle 3 focuses on how businesses need to respect and promote the well-being of employees, including those in their value chains. And as part of one of the disclosures required in the Principle 3 in Section C, companies have to report the percentage of, their workers, their employees being covered by different benefits, whether it is a health insurance, an accident insurance, the maternity benefit, paternity benefit, etc. And they have to do this by the sort of, gender of the employee. So, males and females, and they also have to do it for their permanent as well as other than permanent, which is temporary or part-time employees. Now, all of these numbers are obviously, the number of employees are in actual numbers. This is, 100, 200,000, whatever is the number of your employees. The ratio of it is a ratio of, what percentage of that particular employee is receiving that benefit as compared to the total. And this is how your disclosure template looks like. But how does an assurance provider look at this, right? So from an assurance provider's perspective, what are the sort of data documents that, we seek or we require from the company or the organization? And how do we go about with this process? So first and foremost, when talking about the coverage of different benefits, we would seek data evidencing the coverage of these different benefits, right? So this could be in the form of a list, or it could be in the form of a snapshot from the human resource management system, which allows us to actually identify exactly how many people are being covered by each of these benefits and how many of them are actually availing these benefits. Also, we would look into, the monitoring of, the processes that the company has for checking, how these policies are being established, how these policies are being implemented, and how employees are actually receiving the benefits. And from the perspective of assurance, it starts by, gaining an understanding of what these benefits really mean. What are these benefits? Then collecting and verifying, sample evidence for checking, what is the coverage, how many people actually are getting this. So again, from a reasonable versus a limited assurance perspective, one of the key differences between the two is the rigor in which we do the sampling. So while for a limited assurance, the sampling may be for a limited assurance, the sampling is, limited. From a reasonable assurance perspective, the sampling also becomes very rigorous. And once you have, sampled the evidences, you also have to, do a sort of an engagement with the stakeholder group to ensure that, those benefits are actually percolating through. And lastly, but not the least, verifying whatever controls are being established for monitoring of the entire process itself. Given, that companies do have standard processes from a human resources perspective. So this is one example of how, assurance providers look at non-financial information, such as employee data. Coming to a different KPI, and I thought it would be good to, have a look at an environmental KPI, just to sort of reflect upon the diversity of information that the BRSR requires companies to disclose. So if we look at same section C, but principle 6, which talks about how businesses need to respect and make efforts to protect and restore the environment, one of the key indicators that is mandatory for companies to report is the details of its total energy consumption. And over here again, it is required that companies give this information in a very particular unit, which is in joules or multiples of joules. And this is the template in which this information is required. So a company has to, give its total megajoules of total electricity consumption, both in the current financial year as well as the preceding year. It also has to look at any other fuel consumption that they may have done, also convert that into megajoules. And if there is any other third material source of, energy that they're consuming, they also have to mention that. And then they have to generate the intensity by looking at the turnover and dividing the total megajoules by the total turnover. The SEBI in its guidance document does provide a very, detailed set of steps on how companies can actually compute this number. Alternatives have also been presented with respect to, how companies may also look at alternative intensities. Apart from turnover on a voluntary basis, entities can also give intensity ratios based on the units of the product that they're producing, or the volume of production, or on the number of employees. So there is a bit of flexibility that the BRSR gives to companies. But again, a company has to be very cognizant of the guidance provided and make sure that when they're preparing these disclosures, they follow the guidance so that, they do not end up doing something inaccurately. Coming from an assurance perspective, right, to sort of assure the details on total energy consumption, how would an assurance provider go about, right? When it comes to the data or the documents required, we would actually dive into looking at, let us say, the summary of fuel that has been consumed during both the years. If you're doing the assurance for both the financial years, you would also look at your meter calibration certificates, where some of the inputs that you are consuming, they may be metered. There are different ways of looking at it. Sometimes you use a dipstick for calibration. Sometimes there are weighing machine calibrations. And in that event, you also have to make sure that the equipment being used for, weighing and calculating the actual amount of resource being consumed themselves are, functioning properly. And therefore, you have to look at the calibration certificates. You also have to look at, supporting. So, for example, where you're purchasing electricity, you have to look at your electricity bills. You have to look at the invoices. in some cases where third party report is available, you also have to consider third party reports, specifically when you're trying to identify the calorific value of different resources that a company may be consuming. And all of this information has to go through the same process, which is first of all ascertaining whether the correct coefficients are being used for conversion, because the calorific value of different fuels are different. This is a scientific process, so you need to make sure that you use the right scientific coefficient. You also need to do a random sampling of the different utility bills or the calibration certificates or logbooks to ensure that the consolidated data is accurate. You also need to verify the controls established as part of standard operating procedures or processes that a company may have. And where there are third-party reports, you may also want to verify those third-party reports from a subject matter expertise. So this is how assurance providers tend to be very, I would say, comprehensive. The one key thing that I would call out is when it comes to the BRSR core, or in fact, when it comes to any non-financial, environmental, social, and governance disclosure, the key thing to keep in mind is the diversity of metrics being reported. A lot of information is being prepared by companies. A lot of this information is non-standardized. A lot of this information is also in some cases non-comparable. You have number of people versus metric tons of CO2, scope 1 emissions versus cubic meters or million liters of water versus megajoules of energy. These are all very different units, but a lot of the calculations is based on science, and hence this is something that can be verified, and it requires a comprehensive skill set of people who understand the audit process, as well as people who have a good understanding of the business processes itself, of chemistry, of physics, in order to be able to apply the science part of it. And sorry, I just went ahead. Lastly, very quickly, I just wanted to sort of leave this on the table that although we are talking about BRSR today in India, and BRSR and the BRSR core are indeed very, I would say, forward-looking regulations that, are going to drive a lot of change from the ESG perspective. At the global level also, there are many such regulations that are coming up. In fact, globally, the regulators have really sort of kicked into overdrive. So if you look at the US, you have the SEC climate disclosures, which is also come into force, and by FY23, that is starting from this year, companies will have to start reporting. Similarly, you have the ISSB. The ISSB, again, is a very interesting standardization of the different standards. So under the ISSB umbrella, you have the CDP, you have the SASB, you have the Integrated Reporting Council, all of them coming together. You have TCFD and you have GRI, who are also sort of influencing ISSB to come up with the IFRS S1 and S2 standards. And these IFRS S1 and S2 standards, as we know, IFRS is the body that has the accounting standards in over 140 countries. So the final set of S1 and S2 standards that will be published by the IFRS and ISSB sometime in June or July this year will sort of define how companies going ahead have to report their non-financial information. Similarly, in the EU, we are seeing the SFDR and the CSRD that have kicked in. In fact, the CSRD is a very comprehensive legislation requiring multiple disclosures, and one that is expected to impact almost more than 45 or 50,000 companies, not just in the EU, but also outside of the EU. So it is very important for companies to understand that the regulatory landscape is changing from an ESG perspective. And going ahead, they will need to be very cognizant in how they are preparing their ESG disclosures. Make sure that they do it at the highest sort of level possible, the highest level of quality, that is the best practices, and also to make sure that they are having this information assured, because assurance is what is going to provide the degree of credibility to any of this information that the companies are going to be putting out. And especially wherever you have regulators very quickly start looking towards assurance, because that is the way for them to ensure that whatever information they are seeking is actually correct. But with that, I'll just take a pause. Back to you, Madhu. And thank you, everyone.
Thanks, Nachiketa. This has been very, very useful. In fact, what you said is very relevant. In fact, I was with a private equity yesterday, a partner in private equity, and one of the things that he instantly told me is they now, before investing in any company or a startup or any kind of company for that matter, actually look at what kind of ESG practices they have. And one of the things that therefore they look at is the disclosures that the company make, right? Because that's the primary source, and the validation of those numbers or disclosures they make. Not only because this is good to have, it is actually must for them because their investors actually have mandate to invest in companies that are ESG compliant or have impact in the social sort of ecosystem, etc. So it has gone beyond nice to have to mandatory sort of a thing, and it is only going to get better as we progress. So thank you for your direction around what are the disclosures and the assurance, right? The bigger part is assurance that is now mandated around all these ESG disclosures to build the credibility of disclosures. Thanks for this. I have few questions actually. So maybe Pratik, if I can start with you. Now that Nachiketa told that this what needs to be done, what do you think are the drivers behind this assurance demand, right? Demand for assurance on the non-financial information, right? Historically, we've always talked about audit of financial numbers and things like that, right? But now we are talking about this non-financial information to be validated. So what is a driver, especially in the context of this ESG and BRSR thing?
Fantastic. Thanks, Madhu, and thanks, Nachiketa, for a detailed deep dive. And good evening, participants. Thank you for getting on this call. So I think, Madhu, the entire context in terms of why an assurance is required goes back to exactly why we require an assurance or audit on the financial statements. While the companies do prepare it, a lot of rigor requires to be going through it, and what we call as the 4I principle, that more than 2 eyes need to go through the same data set. I think that's the basic reason why this information has to go out. Now, if you look at the entire trend and how the way it is changing, a lot of KPIs and KRAs are now being set with the ESG goals. With that comes up a very important element called as greenwashing, or in very simple layman terms, ESG fraud in terms of disclosure and in terms of message going out. That's why the people who are responsible with governance want a third-party view to really go out and assess whether the information given out is accurate, and if there are any differences which they are spotting, which can be highlighted and corrected in the subsequent report. The second reason also is the speed. If you look at, again, financial reporting, which has really evolved over probably 4 or 5 decades, the change in the entire ESG spectrum has only happened within the last 5 years. The speed at which it is growing and the demand which is being generated by people in terms of information expectation from the corporates is at a pace where management is not able to actually control, but information nonetheless has to go out. And hence, it again just goes in the same direction that let somebody else look at what we are doing, why we are doing, and then how it is being done. So these are the two real reasons behind which an assurance is required. Coming from the regulator standpoint, again, they would want somebody to keep a check on what information is going out. I'm not saying everybody is a crook, but the expectation from the regulators is if somebody is reporting some information and some independent third party is verifying it, it also provides a lot of information in terms of the credibility. Second, the moment you start putting requirements like assurance and audit and then a third party verification, the process which goes behind the information also becomes much more robust. And that's also going to drive the demand for why and how the information is generated. I think Nachiketa talked about it in very clear terms, the depth in which people have to go to come up with information. Now, he talked about a very simple thing. It's very easy to understand: electricity bills. But if you talk about any large conglomerate operating probably around 100 centers, if you're talking about 100 centers, they might have 100 into 1200 electricity bills. Now, how do you develop a process where these are kept in a place? Now, it looks very easy to explain, but in terms of gathering this information, the entire challenge is going to be staring at our face when we implement it. Also, it's worth noting we have taken really the expectation to a very great extent ahead of others. We have straight away jumping with reasonable assurance. So that's going to be nothing less than of an audit, and hence the requirements are going to be much more stringent, Madhu.
Yeah. So this is going to be very important and developing, I think, in nature. Nachiketa, you talked about, and now Pratik talked about all these assurance requirements and why it is important in non-financial information now. What do you think? And I think you did touch upon it, but what do you think are the main differences between assurance on financial information, which is typically what we have historically seen, and now the assurance on non-financial information? And I will add, Nachiketa, to this one question that Satish has asked, is now that you're going to put a lot of non-financial information, right, and aspects like MLD and some of these other things. I think his concern is, does SEBI or MCA even have qualified people to understand this, right? I mean, or they'll depend on people, like third parties who are going to assure this, or rating agencies or auditors or something like that. So I think financial and non-financials, and then how would regulator make sense out of it?
Sure. Thanks, Madhu. Uh, I guess coming to the difference between financial and non-financial information or assurance of this information, I guess there are a couple of things to sort of keep in mind. First and foremost, the nature of information itself. So financial information, we all know is very quantifiable, monetary. It's revenues, expenses, assets, liabilities, so P&L and balance sheet, right? And we've spent the better part of 250 years developing this, so we all understand that really well. Non-financial information, on the other, very diverse, and in fact there is no sort of a exhaustive list of what all comprises of all the non-financial information, right? You have data related to environment, you have data related to people, you have data related to communities, you have data that is in many ways more subjective. So again, there is a fundamental sort of, I would say, difference in the nature of the information itself. So that is one thing that needs to be kept in mind. The second one is the reporting standards. As I said, we've had a long time to come up with our standards on financial, reporting, and we are very clear on this. We all know what are our standards. We have our GAAP principles, we have our IFRS principles, we have, of complete clarity on how your P&L and balance sheet should be like. When it comes to the non-financial part of it, that degree of certainty is still lacking. Yes, there have been many efforts globally, multiple efforts. In fact, now we are seeing a phase of consolidation of these efforts as well. But really, we do not have a sort of a universal standard when it comes to preparing and disclosing non-financial information. There are still many best practices, but there is no single universal standard on how to go about with it. The third one is obviously with the data availability and the reliability. Given the sort of diverse nature of the information, and again, Pratik also alluded to it, while theoretically on paper it may seem very simple, just the fact of collecting information from 1,200 different utility bills on an annual basis from across the entire country, and if you take large organizations that are also spread across international borders, it can be very challenging, right? So the reliability of the data is always in question until we have also developed the sort of technology to support us in doing this. The fourth factor I would say is the materiality of a lot of these things. So when it comes to financial information, we understand materiality very clearly. We know what is significant, what is non-significant. We know what is the rounding up, and what is an order of magnitude difference. But again, from the perspective of non-financial information, materiality in many ways means different things. It's not just about the tons of carbon, but it's about understanding whether these tons of carbons are indeed material from your business perspective. So again, there is a subjective element to materiality that also has to be kept in place. So I think these are some of the main differences, I would say. And because of this, the assurance procedure itself between financial and non-financial, is, I would say, slightly different. Yes, we do apply the principles of financial assurance into non-financial as well. But when dealing with the actual assurance, we have to have more diversity of skill as well as expertise to be able to understand what information we are dealing with in order to verify and validate that. And I think that again takes me to the second part of the question. Will the regulator actually go ahead and, become this one expert that does everything? Honestly, I don't think, I am in a position to answer that question on behalf of the regulator. But common sense would say that, a regulator is never going to become the one sort of sole custodian, right? Imbibe all the different degrees of expertise into themselves and become the sole sort of way of looking at it. How, let's say, we have the IT department. I don't think, a ESG department is coming up anytime soon. But until then, the regulators will depend upon third-party experts to actually, do this validation for them.
Yeah. No, I think I would guess that would be the case. I don't think regulators will be expert at it, but they will apply judgment and common sense, and they will create a mechanism by which, let's say this assurance itself is a mechanism by which they want to make sure that the information that is put out is at least validated by expert, right? So, Pratik, before even I get to my question, I think there is a question from audience. It's anonymous, but it says, has SEBI come out with any direction on who is qualified to do the assurance on this ESG or BRSR, right? So any particular guidance that has been laid out right now, or it is going to be typically auditors or anyone else?
No, I think a good question, Madhu. So SEBI has only come up with the guidance in terms of an assurance is required, and SEBI will never say who will do the audit. So I think that's left to the bodies. Having said that, while the Institute of Chartered Accountants is also working towards this model, there are many other independent and different firms who are doing this. Now, because there's no specific guidance given, and at the same time, unlike again a financial statement where the chartered accountant having the right skills of a financial statement preparation and the accounting standards is the right person to do an audit. In this case of an ESG, there are various fields which are involved. You will have an engineer, you will have an MBA doing the cons, you will have an accountant doing the right disclosure. Hence, there are multiple people doing this services today. But the bottom line is going to be issuing an opinion is not just a standalone activity of issuing an opinion. There are many things which will have to happen before and after the opinion is issued. So identifying who the right person or the right body for doing it is important. Let me give you some examples. For issuing an opinion, and if you have to do that under the, let's say, the standard issued by the institute or standard issued even by the international auditing associations, you need to have a lot of quality procedures set up within the firm or the individual body that issues that opinion. Now, that's not something which can be developed overnight. That's not something which can be is a one-time activity. That's something which is really takes some time to build up, and then there has to continuous monitoring activity to ensure that it keeps on being current and being relevant. Second, after the opinion has been issued, and then there are of course steps to even do that. After that, there could be a lot of follow-ups by the regulators as well. Even for addressing those, you'll have to demonstrate that all the things that are required to issue opinion in this particular case have been adhered to, and the documentation required is maintained. So to the specific question, Madhu, while there is no specific ask, the corporates who want to evolve on this journey, they will have to be very mindful of who do they appoint to do this particular activity. Now, it could be anybody who has the right skill set in terms of knowing the technical subject matter, but an assurance, as I said, is a step beyond only knowing the subject matter, and hence for ensuring that the credibility of the report and the confidence of the stakeholders is kept intact, that selection will be very important.
Yeah. So Pratik, I know you have deep expertise in this assurance and exactly what you just laid out right now, and you are an expert, and you've done this so many times. What do you think, in your view, are the typical challenges or complexities that you encountered, while you do assurance, and and how do you go about addressing these challenges?
Glad you asked this question, Madhu. So the first, and then there are many, and again, it depends on the complexity of the business also, Madhu. So if I look at a standalone factory and a standalone corporate building, the lens by which I would look at these challenges is much more different than I would do a conglomerate which is spread across the length and breadth of India, and maybe even, as Nachi mentioned, beyond India. Now, the first element, and I think I talked about this in the first question also, the setup and establishment of the right controls is becoming a very, very important part in the entire process, Madhu. And then, as I said, the speed at which this all developments have happened, the entire infrastructure required to generate these data points, to me, is somewhere missing in most of the corporate. I think that's going to be a very, very important challenge for corporates to come up and come up to speed to ensure and tell that this numbers which you are putting up are accurate. Second is also the maturity. Again, it's a very nascent and very quickly evolving area. The maturity required to understand what process is required and what is the end outcome. Just issuing a report or issuing some numbers is not going to be helpful. Identifying what the end objective is, what we normally call as keeping the end in mind, and coming up with that maturity, which aligns with the overall goal of the corporate, is going to be very important. So that maturity also will evolve over time, but today could be missing in some other places. The third element, Madhu, which I think is really a big challenge in this area, is subjectivity and judgments required. As Nachi mentioned, there are not specific rule sets which are available. If they are available, there are probably more than one availability. Also, when you look at the parameters required, there could be more than one. I have come across situations where within the same company, different locations, different people are using different parameters to come up with the same KPI. So in the end, you might see one KPI, but the basis of preparation and collating of that could be very different. So that's where the subjectivity and judgment will have to be very, very consistent. And again, it takes me back to the controls and the processes and the maturity part of it. Second, after this comes the lack of consistency. People come up with the same report, same objective, same KPIs, but year on year also the basis of measurements could be very different. Understanding of the entire process is becoming sometimes a very, very basic element, because the teams are evolving. While you could have a very senior leadership team looking at the entire ESG reporting, but the people down below and all the plants and places may not have been exposed to that amount of technical details, and hence the information which they churn up could be lacking that particular part. Again, unlike financial information, Madhu, where it was, I think now, if I look at with hindsight, was much more easier. The level of skills required are very different. In an ESG today, you require a person who knows climate, a person who knows carbon, a person, so that means an engineer. A person who knows water, a person who knows how air quality could be changed, a person who knows geography, a seismographic expert. So the skills required are really, really different. And you may not be able to get one person probably who knows more than two or three of it. So that's where the biggest challenge comes in terms of the skill sets which are required. Timelines, everything is happening so fast, people are actually struggling. Again, we have done a very graded manner progression, but still timelines are going to be challenged. And the most important part is evolving standards. Every day you read something and new has been coming up. So for me, Madhu, these are the real challenges that could come up, and corporates and professionals will have to face and come up with right solutions on the run when they deal with this.
In fact, we've just got a comment from social media on what you're saying. It says technical information is sought, right? In this case, right? It's not just a financial information. And do you really need to invest in devices and equipment? I'm assuming some sort of a system to capture this, because some of this information, like you said, is not even captured, right? I mean, in financials, you are an auditor looks for CFO to also sign it, right? And in this case, if the management has to sign it, they need some system where you start capturing this information first, right? Like you just mentioned.
Let me talk about one example, Madhu, and this is evolution which has happened over time. Carbon emission, right? Carbon emission from a factory which happens because of the smoke which it emits. Yeah. Earlier, there was a way that the measurement was done once a day, and then based on that, depending on the production capacity, they used to measure the entire output that could happen in one day and then across the entire year. Now there are equipments which you just fit at the top of the chimney, and they do this monitoring continuously. Just imagine the accuracy in which the data is now been captured. Also, when you talk about travel related carbon footprint, right? In places where it is really heavy in terms of travel and in terms of people, IT industries, for example, if you don't have a system which can capture data from the base, which is as soon as a ticket is booked and the travel is done, the data of carbon emission is actually mapped out. You will not be able to capture how much carbon footprint in terms of travel emissions has actually done. So these things will have to come into place. People will have to make an investment in the right technology, depending on not only the business objective, but also keeping the ESG objective in mind.
Oh, wonderful, Nachiketa, and I'm sure there are so many challenges, and as you discuss and debate this, they'll come into light, and then hopefully people will be more equipped to address this. Nachiketa, can you just share some examples or common procedures used in assurance process for the non-financial information? You did talk about number of non-financials and very similar challenges that Pratik mentioned. Just any examples of some of the common procedures that you would use, right? Or some expert may use.
Sure, Madhu. So I guess the first and foremost, I would say thing that is required is to have a good understanding of the processes and the systems itself. So the best way is to understand the business, understand and get a good clarity on what are the existing processes and systems that are being utilized by the business to collate this non-financial information. What are the SOPs and what are the controls? The second phase is then to actually, verify a lot of this information. And in order to do the verification, we do several things. I mean, we visit sites, we do interviews, we actually go and, collate samples of the evidence itself, randomly selected to make sure that, we can check on the accuracy and the quality of that. When it comes to the SOPs itself, again, a lot of documentation review, making sure that, all the SOPs are documented, they are being followed, they are being implemented. And also one interesting way in which, we do look at this is from an external benchmarking perspective. In many cases, what is also helpful given the sort of, I would say, infancy of this information is to also look towards your peers to see that, okay, what exactly are they reporting? And this again becomes very important from a materiality perspective. So maybe as a first time, preparer of non-financial report, as a company, you may not understand materiality very deeply. You may have not done a very deep materiality assessment with your different stakeholders or done that in the right scientific manner. One of the ways of sort of ensuring that you're on the right track is to look at your peers or look at your industry. What is material for your industry? And then make sure that those are the elements that you're capturing. So again, I mean, a lot of the principles are very similar to how you would look at financial assurance as well. It's just that you're applying to a different type of information that is, a different unit. It's no longer rupees and dollars. It's in fact, number of people and tons of CO2 and cubic meters of water and so on.
Yeah. Pratik, you did talk about, I think we had a questions around agencies or, people who can do assurance. And we do have, let's say, in case of financial statement, there are definitely standards about, you need to remain independent. Institute has or chartered accountants have a lot of rules around maintaining independence, credibility, and objectivity, right, around auditors, etc. How do you ensure that independence and objectivity for the agencies or let's say firms that would do assurance in case of this non-financial information or BRSR, right? I mean, any best practices you would like to share?
Madhu, I think the one-line answer is it cannot be any different. Because I'll take you a step back in terms of exactly what the expectation is from the stakeholders and the regulators. And the reason, in the very first question you asked, the reason this assurance has been mandated, they are looking at somebody to opine on what information is going out. Now, if that objectivity and then independence threshold is breached, the very trust on the report which is going out will be shattered. And if that trust and that confidence has to remain, the independence and the objectivity has to continue. And hence, according to me, whichever company is looking at whatever level of independence from an audit standpoint, I think that should continue for this report as well. In case of a financial statement, you're looking at the profit number, which shows how successful the business is running or not. But in this case, you're looking at how successfully the business is run. So the according to me, only the words change. Otherwise, the entire element in terms of what you're looking at remains very, very consistent. And hence, I started with saying the independence parameters shouldn't change at all. Because just imagine if the party assuring this is not independent. Any information and then the risk of greenwashing becomes much more rampant. So that's why the independence part of it will have to be very, very important. Plus, unlike financial reporting, is not just one skill we're talking about. There are multiple elements. Hence, probably the lens by which the management will have to look at it, and even the party issuing the assurance report, probably will have to be much more bigger than and then also an audit. So I think, Madhu, the issue is only going to become bigger and more riskier in terms of its non-compliance.
And you're right. I think while the standards may evolve or develop, right, regulators may come up, right, it's a process. But I think the onus is on the management, audit committees, and the boards, because eventually you are putting an assurance report, and somebody should be able to credibly, sign this, right? That and frankly, they need to be independent to be able to sign this, right, and to lend the credibility to this whole report. So, yeah, no, great. Nachiketa, what in your experience some most common findings or improvement areas during the assurance engagement on BRSR that you did talk about examples of some of the common procedures, but what are the common findings that you encounter actually?
I would say three things, right? First and foremost is insufficient data and quality controls and documentation. But again, this is not surprising, given that this is something that's still relatively very new for a lot of companies.
Yeah.
But going forward, they will have to start investing time and resources and ensuring that they are collecting data at the right level with the required degree of rigor, and also documenting it and using appropriate systems. And that will address the issue of quality data or insufficient data. The second bit I would say is inadequate stakeholder engagement, materiality assessments. Again, this is something that a lot of companies have not sort of initiated in my experience. And again, this is because typically sustainability is an evolving process. You embark on a sustainability journey by first understanding what your business exactly does and how it affects the different stakeholders that are associated with your business. And then you identify what are the material impacts on these stakeholders, to identify what are the main causes or main risks and opportunities associated with your business. In many cases, through regulation, we are sort of jumping the gun, right? So companies are directly going to the reporting part without actually first understanding what exactly we have to report. Is this important for me? Is this critical for me? Is this a high risk? Is this a low risk? So again, with time, again, companies will have to start looking at materiality as well, ensure that whatever information they are preparing and reporting is actually relevant for their stakeholders. Because at the end of the day, all of these disclosures are for stakeholders. So what's the point of preparing something that is, of no use to anyone? And the last bit I would say is, again, given the sort of, I would say, infancy of, companies in the overall ESG reporting and assurance journey today, is a limited integration of sustainability into overall business strategy, right? companies are still looking at this purely from a compliance checkbox exercise as a cost exercise, whereas the true potential of ESG or sustainability lies in unlocking the next level of opportunities for businesses, identifying what is it that they can do better so that they can be more sustainable and more profitable in the long run. But again, all of these are things that sort of evolve with time. So yes, when we are conducting our engagements today, we see that these are some of the areas where there's a bit of a lack of finesse, but going forward, we expect that these will improve.
Yeah, Nachiketa, we have a comment from one of our audience. It says that apart from just the information, right, I think, and the validation, the ethics, and maybe I'm just rewording this a little bit, but ethics, governance, and the culture of the organization is very important. And to look at ESG in a more holistic way when you report it, otherwise just remains in the paper, and then somebody's preparing, somebody's signing, and you're not really getting to the core or spirit of ESG in terms of both implementing and also disclosure. I'm assuming will follow. So I think a valid point. Pratik, looking forward, right? I think we did talk about all the complexities and examples and what assurance means, etc., etc. Where do you think it heads now, right? There's assurance on non-financial information. Any particular future trends, developments that you see in this area? We're just starting to, first prescribe the assurance or limited assurance, like you just mentioned. What could be the potential next step by regulators or generally by the industry? Where would it lead to?
So, Madhu, difficult to really predict because, as I said, there are multiple streams going in a direction. But if you look at the ultimate aim, the objective is, and I see that question asked by somebody. The objective is not to have multiple reports and multiple data points going out to the stakeholders. So eventually, there could be a end objective where the financial information and non-financial information is published in the same report. That's, I think, the ultimate objective of where all the regulators try to drive. Now, can that happen overnight? I don't think so. But if you look at the disclosures prescribed by SEC, the entire accounting standards which are prescribed by IFRS S1 and IFRS S2 are all driving in the same direction. The start is by adding into your financial statements the elements of sustainability in terms of numbers within your financial statements disclosure. So that is now probably a matter of only couple of maybe years. The dates are already out. In June, even IFRS committees will be announcing their standards, and those dates also will be out. So in a year or two, all companies will start putting these numbers within their financial statements as it is. And the moment this get into financial statements, requirement from a audit standpoint, by definition, will extend to this information also. So then the audit that happens for the BRSR or any such report which happens, and the numbers which are presented into the financial statements can't be different. So the only logical way is to have a very coherent and a smooth system into all of this when the consistency of the information can be managed. So in terms of the future, Madhu, it all seems as they are running as parallel streams, but it's not far away that all of this will merge into at one point and we'll have only one single report going out. And that's going to be where the stakeholders, the investors, the public at large will see the impact of the business, not only on the bottom line, but also on the society at large in terms of its ESG parameters.
So the report might look a little lengthier because there are already a lot of things in the report. But you're right, it makes sense to have a common report where somebody could just make the holistic or take the holistic view, right? Both financial, non-financials, ESG, etc., etc. So valid point. So Pratik, how do you perceive this development of reasonable assurance? And what impact do you anticipate it will have on assurance landscape, right? I mean, you're now talking about the not the company side, but the assurance landscape, of this development.
So, Madhu, people are already, scrambling and going at a very rapid pace. But the biggest thing that we'll have to learn is there are two separate elements to it. If I talk about myself growing in this area, there is an element of how to audit and how to assure a number. The second element of that is what to assure. Right. So the professionals who want to go into this place will have to start working on both the sides in parallel. And it's not going to be easy that one person probably will know every element of it. So then building up teams, coming up with experts within your team who know it, having your professional judgments, professional skepticism in everything that is being promoted, and look it from a different lens is going to be very, very important, Madhu. Um, I also think a lot of agencies will start coming up with certification courses. If you talk about ICI has already come up with some courses around BRSR assurance or getting ready for your appointments on this. I'm sure even other agencies will start coming up with their own benchmarks in terms of how to get these qualifications done. But knowing at the speed at which it goes, keeping abreast of all the development is going to be very important. People will have to start looking at the entire process of assurance with a very different lens in terms of what is required and how do they achieve that and how they keep on continuing to mature in terms of the entire peaceful element. So I think that's where the entire process will go through, Madhu. I'm sure the generation which is younger, when I say younger, it's probably the generation after 1990 or 1995, is more geared up in terms of this impact on the entire environment. For them, picking this up is going to be very easy and important, because probably the last sentence I want to say here is this is not a matter of not an option. This is now a matter of life and death. The climate change that we are seeing, if not taken care of immediately, there are going to be much larger repercussions in the generations to come. So people are going to gear up to this much more easier, but it's not going to be easy in terms of the process to get there.
I thought you are the youngest we have right now. So, who is younger than you right now? But anyway, I think thank you so much, Pratik and Nachiketa. And yeah, Nachiketa is younger than you. So he's smiling that I'm not telling him younger than you. But yeah, he's youngest of all of us. But thank you so much. We are on time. We do have certain questions, but we just on the dot here. I think, just if I have to summarize the discussion that we had, right, and the expert opinion of Nachiketa and Pratik, who spent so much time in this. It may sound very innocuous. It's a disclosure and somebody issuing report, but it has significant business impact. It has technology impact. It has just the impact on the how a company or organization is perceived, right? And like I just shared, right? I think there are implications on the cost of capital, because there are people who sort of impact funds who can lend you if there are socially more conscious organization. There are impact on how investors are going to perceive you in future, right? I mean, and there's this whole supply chain that is going to come at the end of it, right? We discussed this the last time, right? On the customers and entire supply chain where ESG is going to apply very shortly. So I think and then obviously sometimes it is easier said than done. There are complexities involved, because this is not financial number where systems and processes are established for hundreds of years. The systems have to be put in place, right? And that is really the challenge. And then somebody got to validate it. And there are a whole lot of questions around what next, who would do this, and is there one expert who can do it, or there would be multiple experts and things like that. So I think there's obviously things have started to move and it will evolve. But yeah, I think a lot of stuff is already happening. So thank you for sharing your insights. And we took number of questions, but we do have other suggestions and questions as well. Unfortunately, we can't take it. We will maybe revert to you. So thank you so much.